Hi there, David from United Trust Bank. Lately, I've been getting lots of questions from my pre-approved buyers about interest rates and where mortgage rates are headed for the rest of the year. And unless you've been living under a rock in January, you know that mortgage rates have been rising and rising pretty quickly. In fact, since I got in the business in 2004, this is without question the fastest rise that I've seen to mortgage rates. And understandably, some people are getting nervous about that, and they're wondering whether the payment is going to double or triple, and that they won't be able to afford the homes that they're looking at. And some people have even told me that, you know what, David, I'm just going to put the home purchase on hold. We'll revisit this in 23, maybe 24. We'll see where rates are at that point, and I'm just going to continue renting. Um, the reality is the perceived payment increase from the mortgage rate increase is not as big as what you might think. So I wanted to look at where rates are today, or I'm sorry, where rates have been in the past, where they are today, and where they're going in the future. So let's look at this example here. And this shows if on the left, if you had bought a home in 2021 for $500,000 and put 20% down, $400,000 loan, and let's just use a 3% rate, even though rates were slightly lower, but they were averaging around 3%. And I'll get into why the rates were so low in a minute. But using that scenario, the principal and interest payment was $1,686 a month. And now we fast forward to today, where rates are closer to 3.75. Using that same price and down payment, the principal and interest payment goes up to $1,852 a month, about $166 a month increase. So where are they going? Well, I believe rates are going to continue rising this year. So let's just say they go to 4.25, which is very possible given what we're looking at and comparing it to historical rates. Based on that, the same $500,000 house with 20% down now has a principal and interest payment of roughly $1,968 a month, an additional $116 from the current payment. Now, what's important to remember here is we do not live in Back to the Future, and we can't go in a time machine and go see where rates were in 2021. Those are gone. So we can only look at rates where they are at the present moment and the expected change in the future. No one likes to pay more than they have to, but we're seeing rising prices in almost every category, from groceries, gasoline, cars, you name it. Inflation is the archenemy of mortgage rates, and the hyperinflation that we're currently seeing, combined with the Federal Reserve's elimination of buying mortgage-backed securities, which artificially kept mortgage rates low over the past 2 years, while we were dealing with the challenging COVID situation, is going to continue putting pressure on mortgage rates to continue rising. Keep in mind that interest rates in the fours are still historically low. It's nothing to panic about. I've sold much higher rates in my career, and I'm certainly not worried about it either. Just keep things in perspective and realize that buying a house today is the best financial investment that you can make for your future. So don't let the perceived rise in rates scare you away from what is easily the best investment in your future. If you have any questions about getting pre-approved, about where you think mortgage rates are going to be, how this affects your particular payment scenario, don't hesitate reaching out anytime. I'm here to help. Have a great day.